I always say the proof is in the pudding. And here's an example, and this is my account from 2008 with Goldman Sachs. They were my clearing firm. So a couple things you can see here. The end of the year date, 12/30/2008. Okay, that's the trade date. You can see my clearing firm right there. So I was clearing Goldman Sachs at the trading time when I was on the trading floor. So I cleared Goldman Sachs, trade date, 12/30/2008. Then you can see my name on the account. So Andrew Keene was part of Cattle Group, Keene, Andrews, Tilly, Lewis. My account was 39 MW. I was on a split deal. I had 80-20% of the profits. So this was my profits in 2008 when the market was going through the biggest correction and recession in my generation. I made $3.5 million. And all I traded was institutional order flow in the option market. What I'm going to teach you guys today is institutional order flow in the option market, how I allocate capital on my trades. As you can see here, 2008, right? My name, Andrew Keene. During the biggest recession in history, I made $3.438 million. And I said that was before C-lease, payment for order flows, and commissions. To this year, and this account has gone down, okay, I've lost a lot of money in the last couple of weeks. This year, 10 years later, so we started talking about 2008. Well, this is 2018. In 2018, this year, I started with an account of $55,000. This $55,000 account before, so this was from August, I don't think I have a date on this. I have lost money since then. You can't see my screen. Can everybody see my screen? Should be able to see my screen now. Okay, so this is 2018. So 2008, unusual option activity in the option market. 2018, started this account this year with $55,000. Okay, there's no zooming in now. It started this account with $55,000, and you can see this $55,000 has now was up $86,000. So I've taken that $55,000 and turned it into $140,000. And what I'm here to teach you guys today is institutional order flow in the option market, using order flow to place and allocate trades. I'll teach you guys my proprietary based trading plan, how to use unusual option activity in the option market. And you can see here, these were my individual positions: Melcor, SPWR, ADTN, and so on and so forth. Okay, so let's talk about gambling versus trading. Why do people go to Vegas? And I will say I've been a victim of Vegas for a very long time. When I went to Vegas, I would show up to Vegas with $5,000 cash. Okay. In that $5,000, I would gamble till it's all gone. It didn't matter if I was up $10,000, I was up $20,000. I would gamble until that $5,000 was gone. I'm here to teach you guys how to trade. Trade is probability. It is math. It is like playing poker. It is not like trading, like playing craps, roulette, or blackjack. If you play craps, roulette, blackjack, Pai-Gow, in the long term, you're always going to lose. If you play poker, Omaha, Texas Hold'em, against other people, you have a chance to win. So most people go to Vegas to gamble. Most people trade to gamble. I do not gamble. I put on probability math trades based on institutional order flow in the option market. Is it possible that I lose money in a day, a week, or even a month? The answer is absolutely. But I know in the long run, over time, just like playing poker, I will make money. So if you guys want to trade stocks, if you want to trade futures, if you want to trade Forex, I compare this to playing the house in blackjack or Pai-Gow. you're always going to lose money in the long run. So why do people gamble? The thrill, the rush, the adrenaline. But most importantly, they always lose. I'm here to teach you something new, something different, something you can use starting tomorrow. I'm going to teach you guys my proprietary based trading plan, which is called the Oak Ribbit Trading Plan. OCRRBTT. How I look at trades and decide if I want to place a trade. I'm going to teach you today not how to gamble, but how to put on trades based on probability and math. You guys see my screen, right? Can you guys see my screen? Just say yes if you can see my screen. Okay. Everybody says yes except Richard. Richard, I would restart your computer if you cannot see my screen. So if you're not seeing my screen, I would restart it here. Okay? If you play the computer in chess, you're always going to lose. Okay? And this is how I compare trading stocks, futures, and Forex. Okay? If you play the computer in chess, you're always going to lose. Because in chess, if you're playing on an expert level, can you get a copy of the webinar? No. We don't send out copies of the webinar. If you play the computer in chess, you're always going to lose. And this is very similar to trading futures, Forex, or trading stocks. Set it to expert level, you're always going to lose. This is why I came up with something that is very similar to playing poker. A lot of you guys are here for one reason and one reason only. The reason that you're here today is to make more money. Who here wants to make more money trading? Just write yes in the notes tab if you are here to make money. Yeah, Johnny, Vic, Laura, right? Yeah. So you guys are all here for one reason and one reason only. It's to make more money. You guys got, an email that said, hey, show up to this webinar. And in this webinar, hopefully I'm going to teach you guys how to make more money trading, because that is the goal in trading. I talk about it all the time. We're not saving the manatees here. If you're trading futures, if you're day trading stock, or if you're trading Forex, it's like playing the computer in chess. On the expert level, you're always going to lose. But trading unusual option activity or institutional order flow in the option market, it's like playing poker. Okay. Here's a picture of Phil Ivey. I consider Phil Ivey the best poker player in the world. It is true that Phil Ivey can lose money in a day, a week, or month, even a year. But if Phil Ivey, which I do not know, I am not friends with, texted me and he said, hey, AK, I have a poker game. I was wondering if you want to back me for $1,000. You'll get a percentage of my profits and losses. Would I take the trade? The answer is absolutely yes. Why would I take that trade? Because Phil Ivey is one of the best poker players in the world. I have friends that I play poker with throughout the years. There's really, really bad poker players. So think about poker players just like traders, right? The best traders always end up with the most money. The best poker players end up with the most money, okay? Phil Ivey has a knack that you cannot teach. Basically, how he knows if people are bluffing and how he knows if they're not bluffing. Trading unusual option activity is a mechanism where you could be bluffing. An institution could be buying calls against a short stock position. An institution could be buying puts against a long stock position. You never know a trader's stock position. That's why there's a bluffing mechanism involved, and this is why unusual option activity will always exist in the market. So I once got an email from someone, and he said, hey, AK, what's my name? Can I trade on a 1-minute bar? I want to trade Apple on a 1-minute bar. And I said, of course you can trade on a 1-minute bar. However, but, I'm not good enough to trade Apple on a 1-minute bar. So there are thousands of ways to trade. I'm here to teach you one idea and concept, and that is to trade institutional order flow in the option market. I'm watching this trade throughout the course of the day. I'm reacting, and I'm taking signals based on these trades. What works for one person might not work for another person. And I think this is at the board of trade. Okay, so these are all traders in the pit. Everybody's going to trade differently. Everybody's going to have a different risk tolerance. Everybody's going to have different goals, okay? Maybe your goal is to make $100 a day. Maybe your goal is to make, this guy's on his cell phone, it looks like. Maybe your goal is to make $500 a day. I should say the NYMEX. Okay, so every single person here in this webinar has a different goal, has a different agenda. I'm here to teach you how I trade, how I've made close to $5 million in my trading career, how you can take my ideas and concepts and apply them into your own trading. There's over 100 people here today. Unfortunately, 90% of you guys are going to lose money. Reasons that beginner traders lose money. Reason number 1, improper reward to risk setups. Reason number 2, a poor look at the chart. So, everybody's going to have a different goal. I'm here to teach you how I trade. So, these are the hedge fund managers. This is David Einhorn on the left. Has David Einhorn had poor trades? Absolutely. Has Carl Icahn had poor trades? Absolutely. But these are the best hedge fund managers in the world. I'm watching their trades throughout the course of the day, and I'm reacting to them. What I'm going to teach you guys today is how to read institutional order flow in the option market. There's people that teach you how to read stock. Well, I'm here to teach you how to read institutional order flow. So through the last year, I've watched trades that Carl Icahn's made. I've watched trades that David Einhorn's made. Today, I'm going to take you through a concrete trading plan, OCRRBTT. So 7-step trading plan, how you can get these trades, react on these trades, and figure out if these are good signals or not. You have an iPhone 5? You got to upgrade that iPhone. Okay, why? It is a fact that hedge funds have read information to analysis that we do not have as a retail trader. Okay, there could be 500 articles on Reddit, half bullish Tesla, half bearish Tesla. Okay, let me tell you a little story. When I was on the trading floor, I was massively short GE. There was an article over the weekend that GE got a contract in Asia for $8 billion. Okay? All weekend, I said, hey, you know what? I was nervous, okay, that basically GE was going to be up a lot of money because I was short the stock. Over the weekend, I was sweating because I was short GE. What happened in GE over the weekend? On Monday morning, I came in and the stock was up 8 cents. From that day, which was probably about 2006, I said I'm never going to look at a news article again. Okay? If you guys want to sit there and read news articles, I'm telling you, I think it's a waste of your time. All I need to do is look at institutional order flow in the option market and place a trade on this. Because it is a fact that hedge funds trade on research and information that we do not have as a retail trader. They are trading on insider information. Does reading paper or institutional order flow in the option market work 100% of the time? Absolutely not. I've had a lot of trades this year where I've lost money. Okay? Nothing works 100% of the time. But for me, this has consistently made me profits, and I want to say about 11 of the last 15 years. So, it is a fact that hedge funds and rich people, Mark Cuban, trade on insider information. This is a picture of Mark Cuban. They went after Mark Cuban for insider trading. He got off the hook. he actually paid more in legal fees than he would have had to pay for the SEC. And he kind of laughed it off. Okay, Leon Cooperman, Martha Stewart, Phil Mickelson, they're always getting in trouble for insider information. Hypothetically speaking, if I knew a stock was going to go from $30 to $50, would I buy stock? The answer is absolutely not. What I would do is I would buy calls, because calls are a derivative of stock. They take the stock ROI, return on investment, and expedite them. Okay, so here's a picture of Mark Cuban. Here, you can't really see it here. I did a Google search here in Leon Cooperman. Okay, so the SEC was going after Leon Cooperman for insider trading. He's one of the top 5 richest hedge fund managers in the world. He got off the hook, or he settled with them, but they thought he was insider trading. Okay, so if maybe watch an episode of Billions. Billions is on, and it talks about how they're trading on insider information. Basically, there's a soda case where basically they paid someone to fake that the soda was like poisonous. The stock went down and they covered their short. That's a perfect example of insider information. Okay. So what is paper? Paper is an order from a hedge fund, mutual fund, retail bank, or big trader. There are basically 2 types of trades. There are calls and there are puts. If an institution buys calls, I would say, and this never has been back, to 60% of the time they buy calls, and at 60% of the time they buy calls, it's bullish. 40% of the time they buy calls, it is bearish. Institution sells calls, okay? So it all depends on what a trader's stock position is. We never know what a trader's stock position is. I would say this is 50-50. Okay, 50% of the time it's bullish, 50% of the time it is bearish. Institution buys puts. 65% of the time it's bullish, 35% of the time it's bearish. And you say to yourself, AK, I've read every single book. How can buying puts possibly be bullish? And the way that buying puts can be bullish is if, and there's a really good YouTube video with Jim Cramer, if they buy puts and they buy stock. So the synthetic of long calls is buying puts, buying stock. So if an institution buys puts and they buy stock, that is the synthetic of buying calls. Institution sells puts. I would say this is 80-20. 80% of the time it's bullish, 20% of the time it's bearish. And if you look at a pattern right here, what is this pattern? Well, it's easy. Every single trade is bullish. Okay? And you say, how can every trade be bullish, AK? Sometimes they're taking speculation at the downside. Yes, sometimes they are taking speculation at the downside. We have been in a raging bull market since 2009. The idea and concept that I'm going to teach you guys today works better in a bull market. It doesn't mean it won't work well in a bear market, but it works better in a bull market. So it is reading paper, and remember guys, paper is an order from a hedge fund, mutual fund, retail bank, or big trader. Does it work 100% of the time? The answer is no. Nothing works 100% of the time. However, or comma but, I can put probability and math in my favor by using the trading plan that I'm going to teach you guys in a minute. Okay? So this works best in a bull market. Okay? So institutional order flow. There are a couple kinds of traders. There is mutual funds, there's pension funds, and there's sovereign wealth funds. Okay? This is a picture of, I think this is a whale. I'm not 100% sure here. So this is a whale. Okay? So let me put a picture. This is a whale. Okay? The whales are mutual funds, pension funds, and sovereign wealth funds. Most of the trades that the pension fund, mutual fund, and sovereign wealth fund are making is a hedge against a basket of stocks. So when we see institutional order flow in the option market, and we see an institution buying puts, okay, a lot of times they buy puts as hedge against a long stock position, okay. Goldman Sachs was famous for this. Goldman Sachs would come into the VIX pit, and I know because I have a lot of friends that trade in the VIX pit, and they would buy a call stupid. That is two different calls, okay. Is that a whale shark? I thought that was yeah, it was a whale shark. So they'd buy two different calls against a basket of stocks. They weren't buying VIX calls because they thought the VIX was going to go up. They were buying VIX calls against a basket of stock. What I'm trying to do is I'm trying to be the little guy, okay? I lost almost $20,000 today. That's real money, okay? Thankfully, I'm still up $60,000 this year on a $55,000 account. One of the worst days I've had in a couple months. I'm not going to sugarcoat it. I'm just trying to be under this whale, okay? Trying to figure out what are the best signals and trades throughout the course of the day. So most trades are actually hedged positions, okay? SPY is a perfect example. So I personally do not trade institutional order flow in the option market in SPY, in VIX, in Apple, usually not in Micron. These are hedged positions, okay? So we see here, if we had to blow it up a little bit, which you can't blow up here, an institution sold, so they bought, these were July 250 puts, they sold the June 270s and 72.5s. SPY is a basket of stocks. Most of the order flow is hedged against stock position. Okay. Then we have VIX. This is an example of VIX calls. Okay. VIX calls are usually hedged against a basket of stock. So most of the trades, as we watch throughout the course of the day, are hedges against basket of stocks. I am not looking for hedges against basket of stocks. What I'm looking for are big single orders in the option market that I can allocate capital on my trades. Okay? So, the pension funds, the sovereign wealth funds, and the mutual fund, most of their trades are not good signals. They are hedged positions. So, which trades can I make that are good trades? Where are the speculative trades out there? And that is why I go to the hedge funds. The hedge funds are the killer sharks. Okay? These are your David Einhorn, your Carl Icahn, your Bill Ackman. And like I said, guys, if they knew a stock was going to go from 30 to 50, they are not going to buy stock. What they're going to do is they're going to play the option market. Why are they going to play the option market? A better return on investment. Okay. Throughout the course of the day, I watch signals from the biggest and best traders in the world. I'm just this little itty-bitty guy underneath it. Okay. These are Alpha Shark elite traders. So by being able to see what the more aggressive fish is doing, I can seize opportunities to profit by following smarter organizations, okay? So every single trade that I come up with, okay, isn't my own trade, to be completely honest, guys. It is based off institutional order flow. So throughout the course of the day, I'm looking at these trades. I'm saying, hey, and I'm going to teach you guys the trading plan. Is this a good trade? Then I'll allocate my capital if I think it's a good trade. So these are the hedge funds. Okay, hedge fund players, we already talked about this earlier. Okay, these are just two of the biggest. Carl Icahn, David Einhorn. David Einhorn, is that Bill Ackman? It's Bill Ackman. Bill Ackman was short Herbalife. Then he transferred his short Herbalife into puts in Herbalife. Because when you buy puts, you can lose a lot less money than if you short stock naked. So here we see Carl Icahn and Bill Ackman. So you say, what is the order process? How are these trades and how can I get these trades? The institution will create a trade based on research information, and analysis. They will then call their broker to get the trade executed. That broker will then shop their order to Citadel, Goldman, Barclays, Morgan, and Merrill. So basically, an institution will come up with a trade based on research, information, and analysis. They'll go to their option guy. Hey, I think EA can trade above 134 by next week. What option should we buy? They'll place an allocated trade. Okay, so let's say they go. I think the example we have is Hain Celestial. So they'll buy Hain calls. Okay, they shop the order. They say, hey Citadel, hey Goldman, hey Barclays, do you want to sell any of these calls? So all I care about is what the initiator is doing. I don't care what the brokerage firm is doing on the other side. They will decide if they want to sell their calls, and they will hedge their position against stock. Then the trade is executed on the trading pit and is sent out to a proprietary-based feed. Every single trade I see throughout the course of the day. Okay, the trading desk will then get these trades, and I react on these trades. Does reading paper work 100% of the time? The answer is easy, simple. No. This is not a holy grail system, guys. Nothing in this world works 100% of the time. Okay? But over time, this is the trading plan that has made me millions of dollars trading, and I'm going to teach it to you. Okay? So order process. Institution comes up with a trade based on research, information, and analysis. They call the broker. They shop the order to every brokerage firm. Then it gets executed on the trading pit. Okay? Once it is executed, it becomes a public order. So even if the institution is trading on insider information, I am not trading on insider information. What I am trading on is public information, which is so important. Okay? So here's an example of Hain Celestial. So let's break down this trade. Institutional order flow in the option market. A trader bought 4,465 Hain Celestial August 27 calls for $1.35. So trade size, 4,465. Symbol, Hain. Expiration, August. How do you overcome fear and hesitation when you enter these positions? It's a really good question, Dennis. And here's the thing. In trading, you have to risk money to make money. Just like playing poker. Scared money doesn't make money. I know on trades how much money I can lose. Okay? So institutional order flow in the option market, a trader bought 4,465 HAIN, Hain Celestial, August 27 calls for $1.35. And it shows where the stock was trading, $26 at the time. So if we broke down this trade, a trader bought 4,465, so this is the right but not obligation to buy 446,000 shares of Hain Celestial between now and August expiration, and for this right they paid $1.35. Okay, so it is about a $650,000 bet in Hain Celestial. Okay, about a $400,000 bet in Hain Celestial. Okay. So I said to myself, this is a good trade in my opinion. I could be wrong. Volume is greater than open interest. I looked at the chart. The chart looked like it was reversing, so I took this trade. So I bought some of these calls. Okay. Here's my P&L in Hain Celestial. You can see it here. I made $16,175. So we see here, this is the date, June 11th. Okay, so June 11th. Let's go back one slide. And this signal was on May 31st. Do you completely trust your analysis? I mean, yeah. I mean, I can show you a list of trades that I've lost money on. I'm not going to make money every single trade. But I know over time I will make money. So the signal happened on May 31st. Okay? Then on June 11th, okay, so about 12 days, it took me 12 days to make $16,000. Simple and easy. It was a great, great trade. Not every trade is going to be this profitable. Not every trade is going to make this much money. But this is the prime example here, and I'm going to teach you guys what unusual option activity means, and I'm going to teach you a concrete trading plan of how to take these trades. Okay, so let's go to the next slide. So my grandmother used to bake a pie or cookies from scratch every single day for my grandfather. Okay, she passed away when she was 92 years old. And basically, she'd put in some butter, she'd put in some sugar, she'd put in some flour, and then she'd come up with this pie. And I said to my grandma one time, hey, you know, basically, can you teach me this? She was like, Andrew, it's all in my head. Dash of this, cup of this, you know, like, basically, I'm like, well, how do I know what to do with it? And I said, teach me this. Where's the recipe? Where's the secret sauce? And she's like, don't worry about this. I got this, Andrew. Well, she passed away. She had a great life. She's 92 years old. I love her very much. But, you know, her secrets kind of, you know, went with her. Okay? I'm here to teach you guys an exact trading plan. Okay? I'm here to teach you guys an exact trading plan so you can put this into your plan tomorrow. This is probably the most important slide. This is the Oak Ribbit Trading Plan. OCRRBTT. Okay? Take a picture of this, write this down, put this next to your computer. The first thing I look at is the option volume. Is volume greater than open interest? I want to only take positions where volume is greater than open interest. Okay? So volume versus open interest. Then I look at the chart. So when I see this unusual option activity, which we've shown you guys an example here, I go through a concrete trading plan. The first step of the trading plan is volume. I need volume to be greater than open interest for me to make a trade. Then I look at the chart. Is the chart bullish? Is it bearish? If I see a bearish chart, I see calls being bought, I'm not going to take a trade. Then I look at R&R. Some people like rest and relaxation. I like a reward to risk setup. How much I'm willing to risk on a trade versus how much I could potentially make on that trade. B, break even. Break even for calls is the strike price plus the price of the call. Break even for puts is puts minus the price they paid for the puts. Okay. T and T, time and target. How much time do you want to give on this trade, and what is the target of this trade? Okay. So this is it, guys. This is how you can take any order you see on Twitter, you see on the Nigerians talking about on halftime report, and decide if you want to place a trade. Okay. OCRRBTT. Volume versus open interest. Chart. Risk versus reward. Break even. Time and target. Okay. So let's look at the first thing. Option volume. Okay. Is the volume greater than open interest? I'm only looking at trades where volume is greater than open interest. And if I was in my Thinkorswim account, I can show you where this is. It might take a minute here. Okay. So volume are how many options trade today. Open interest are how many options are there before today. So I always want to make sure that the volume is greater than open interest. Okay. Then the chart. Okay. The chart, most of you guys are losing money for one of three reasons. Reason number one, you're taking improper reward to risk setups. Reason number two, poor analysis of the chart. And reason number three, that you're not looking at institutional order flow in the option market. Those are the three reasons you're probably losing money. Okay? If you combine all three, then you have a better chance and probability of making money. We said there's over 100 people here today. I'm sorry, but based on probability in math, 90% of you guys are going to lose money. And that is a fact. Okay, that's just the way statistics work. I'm taking an hour out of my day, or my night actually, I have dinner after this, to teach you, educate you more properly. Okay? Then we have our risk versus reward setup. If someone came to me and said, AK, I want you to come up with a trading plan that 95% of my trades will be winners, I would say that's the easiest thing in the world. Do you want to know why? Well, I didn't say you'd be profitable, but 95% of your trades will be winners. Okay? Reward. We're going to teach you guys in the master course how you can use your ATR, average true range, and your standard deviation ATR in your trading plan to figure out proprietary based targets. Okay? It involves delta times ATR. And I was just going to bring up Thinkorswim real quick. Trying to bring up Thinkorswim. Okay. Okay. So if we go to, let's say we went to win today. Okay. Just give me a second. Tesla get down $9. Okay. So if I went in here and I went to win. Let's just say we went to win. Okay. So there's two things. There's volume and there's open interest. So today, somebody somewhere in the world bought 11,000 WYNN October 45 calls for $8. Okay, that is an $8 million bet. So somebody bought the right but not obligation to buy 1 million shares of WIN between now and October expiration, and for that right, they paid $8. So an $8 million bet that WIN goes higher between now and October. I would write that down in your radar. Keep an eye on WIN going forward. Okay. So volume is how many traded today. Open interest is how many exist before today. So reward to risk setup. Make sure you're always setting up a proper reward to risk setup. Break even, that's always on expiration. Strike price plus the price of the calls. And then strike price puts minus the price of the puts. Okay? Then we have time and target. This is something we're going to teach you guys on the master course, which is really, really important. Okay? And then target. Target is based on your ATR and your standard deviation ATR. Okay, this is really, really important. You can use this in all your trading. Okay, ATR is your average true range. This is how much a stock moves from high to low 1/3 of all days. Standard deviation ATR is how much a stock moves from high to low 2/3 of all days. So make sure you look at your standard deviation ATR and your ATR. Okay, when you're trading. There are other factors that we haven't taught you guys yet today. And this is something we're going to deep in a little bit more on the master course. Number one, the whole option chain. How you can look at the out of the money options or the in money options to figure out if it's a better signal or not. Stock volume versus option volume. Okay. Okay, stock volume versus option volume. Also, adding volume versus open interest. All these trades are public orders. So I've given you kind of the basic or the beginner version, which is the oak rivet trading plan. In the master course, we dig a little bit deeper, which is looking at stock volume versus option volume, the whole option chain, and adding in the open interest of out of the money and in the money options. Okay. Summary and key takeaways. Reading paper does have its limitation. It is not a holy grail system. Call buying is not always bullish. Put buying is not always bearish. Bulls can't bluff selling puts. Large paper and unusual volume will help put probability and math in your favor. Remember, guys, the oak ribbit trading plan. Okay? No trading plan is trading system is without losses. If someone tells you they have a holy grail system, I would personally run for the hills, but you're up to your own discretion. Understand that losses are forever a part of trading, and that controlling risk is most important, and managing profits is second. Okay? This is not a holy grail system, but this is how I've been trading for 15 years every single day. Trading the oak ribbit trading plan. This is how I've made close to $5.5 million. Watch the hedge funds trade and mimic their positions. So every single one of these trades, I have a position on. I see Teva up 63 cents in the after-hour session. I'm long Teva OCK 25 calls. Why am I long these calls? Because I watch institutional order flow in the option market, buy these. This is how I made close to $1 million in Apple, not 1 year, but 2 years. I have traded over 1 million equity options in my trading career and 40 million shares of stock. Stop guessing and start trading with an active trader who trades every single day. So this is everything you're going to learn in the master course when you sign up. Okay. If you guys like today's presentation, if you want to learn more about unusual option activity, there is nowhere else on the internet. There is nobody else that will teach you guys institutional order flow besides myself. And the reason being that is I actually traded on the trading floor for 10 years. I'm taking all that research that I learned on the trading floor and offering it to you guys today. Okay? Learn why the oak ribbit trading plan. Wide volume versus open interest. Why are you looking at call buying instead of selling with bullish put? If a stock is trading $30 and they sell the 25 puts, it's really bullish. However, they have $5 a cushion to the downside. So when they sell out of the money puts, it's actually bullish to neutral, if that makes sense, because they have a lot of cushion to the downside. If they buy a big mass amounts of calls, that's a better signal. How I use stock volume versus option volume. Figure out an exit strategy and a non-blowout trading plan. How to know which trades to put money on based on institutional order flow. There's certain trades that you should put more money on. There's certain trades you should put less money on. And this is something, everything we're going to teach you guys in the master course, guys. It is a 3-hour workshop on demand. It is my heart and soul of 15 years of trading every single day. Okay. Is this a system that can be done every evening? Yes. So you don't need to be a full-time trader. This is about investing in your education. Okay. So this is the Unusual Option Activity Master Course. Okay. Here's the link where you can sign up, and I'll leave it open for questions. optionsonthefloor.com/hot. Something like it hot. Something like it hot. Okay. And I always try to get you at least 6 times your capital, just like any trade. So this is the Unusual Option Activity course. It is on demand. Okay. It is $197. What else also I'm going to throw in here is a 30-minute mentoring session. I actually usually charge about $3.99 for that. Okay. Plus a cheat sheet. The cheat sheet will tell you everything that I made money on it and lost money in this year. So $1,300, about a $1,500 value, guys, which is about 7 times your initial investment. Okay, so let me say a couple things about this, and then I'll open it up for questions. Okay, this is the Unusual Option Activity Master Course on demand. So the minute you purchase this, You can start learning immediately. Number 2, so it's optionsonthefloor.com/hot. I see people signing up. Jim is in, Barbara is in, Paul is in, Richard is in, Rocco is in. Is this it, or will there be another opportunity to buy more courses? No. This is our #1 selling course. Okay, I've sold about 10,000 courses in the last 6 years. I probably sold 3,000 of this course. This is the bread and butter. If you went on the internet right now and you looked up unusual option activity courses, there aren't any. You cannot learn anywhere else institutional order flow in the option market besides with me. And if you guys sign up today, we're going to throw in 2 bonuses. Okay? What kinds of tools are available to find large order flow? I'll make you guys a deal. If you guys sign up today, I'm going to also throw in another bonus, which is a Twitter top 5 traders to follow on Twitter. So you can get all the trades in real time, live. That's another $199. Okay? So that's $199. So we're up to $1,700 now. So it's about 90% off. Okay? So this is $1,700 total, and we're offering it for $197, guys. If you like today's presentation, if you want to learn how to potentially make more money, you have to be willing to invest in your education. So this is the Unusual Option Activity Master Course. This is on demand. It's 3 hours long. If you went to our website and you put in the Master Course, it is $1,000 just for the course on our website. We're throwing in 3 bonus items. Bonus number 1, mentoring session. Okay, that will be a 30-minute group mentoring session. I usually charge $399 for a 30-minute group mentoring session. Bonus number 2, cheat sheet. You'll get a list of every single trade I've taken this year, all the trades that have worked for Unusual Option Activity and haven't. Bonus number 3, I'm going to give you the top people to follow on Twitter. So you say, how do I get these trades? I'm going to give you these. And this isn't even included. I'm going to have to send these on my own. Okay? I've just been informed, if you guys sign up now, we're going to do the Master Course live as well. Okay, so if you sign up today, you're going to get it on demand and live. I've just been told by the higher power, if you sign up today, and today only, okay, we're going to give you the course live as well. So it's options on the floor. So we're going to give you the demand course and the live course. Ooh, and here's the link, guys. It's guys and girls, optionsonthefloor.com/hot. If you guys have any questions, please put them in the chat box. Okay? So I made $16,000 in Haynes. To get this education, actually, when I started with Bodie Capital Management, I had to sign a contract, and they said my education was worth, I think, $120,000. If I left and taught this to anybody else before I went through their whole program, they were going to sue me for $120,000. So this basically program is worth $120,000 because that's what I thought I was going to get sued for if I left before I went through the whole program and curriculum. Okay, so it's a $1,700 value, guys. We're going to give it to you on demand and live. This is the Unusual Option Activity Master Course, plus the mentoring session, plus the cheat sheet, and I'm also throwing it in the bonus Twitter. It is a $1,700 value, and we're offering it today for $197. If you guys have any questions, please put them in the chat box as well. Question is here, Andrew, do you have any trades that hit the tape today that you like? I'm going to give you guys a little trade. WYNN, W-Y-N-N, OC45 calls, institutional order flow. Okay. In the option market, a trader bought these. I like these a lot. Okay. So when OC45s, okay, when OC45 calls, they were bought for $8. This is an $8 million bet here on the market. So this is all about investing in your education. Okay, Gigi, take it over. And correct this. A institution bought GLD puts. I don't look at GLD and look at it as like GLD is not an order based on unusual option activity. I do not take trades based on unusual option activity. I'm looking for Hain. I'm looking for Pizza. I'm looking for EA. I'm looking for AA as well. These are the signals you can make money. I'm looking for Win. There was a huge buyer of MGM calls yesterday. I'm looking for MGM. So this is a 7 times your money investment, guys, in your education. If you're not interested in your education and potentially making more money, then good luck to you trading because you're going to need it. This is the Unusual Option Activity Master Course. It is on demand, and we're also going to do a live fulfillment. Mentoring session is $399 plus the cheat sheet, okay? Plus the Twitter bonus, which I didn't even say I was going to include for here for free, and we're offering this all for $197. Okay, optionsonthefloor.com/hot. Optionsonthefloor.com/hot. So make sure you guys sign up here. Okay. Does anybody have any questions at all? Please put any of your questions or what I think of any stocks in the chat box. It's $197. So you guys can sign up and get the master course for $197. When is the live date? It's going to be live fulfillment. August 21st, guys. August 21st is live fulfillment. August 21st is live fulfillment. So you'll get that live. Purchase previous. Do I have access to class for review? No. You have the access. You have the class for review. Yes. Okay, I'm going to say 3 things about this, guys. Number 1, this is a product you will never be charged ever again. Number 2, this is on demand and live. Number 3, this is our number 1 selling course. I've sold over 10,000 educational courses. This is the number 1 selling course that we have. Okay? And we're doing a live fulfillment. This is different than any other course you've gone to before. Any other questions at all? Let's go over some charts here. So just fire away any charts, guys, and I'll look at bullish, bearish, or neutral in a second. Where is Thinkorswim? Trying to bring up Thinkorswim here. It's not letting me. All right. So just fire any chart, guys. I'll show you bullish, bearish, or neutral in a second using my proprietary based Thinkorswim Ichimoku Cloud Indicator. It's not letting me minimize it, right? Okay, so there's the link here. Optionsonthefloor.com/hot. All right, guys, any chart you guys want, just fire any chart. These trades can be done at your own time. Yes, absolutely. All right, so here is the better link. So this is everything you're going to get, guys. You're going to get the unusual option activity trader workshop. You're going to learn how to dissect the whole option chain at one time, master standard deviation ATR and the ATR, okay? How to add to a losing position. I added to a losing position in TIBA, and it's working out today. Learn a confidence skills and avoid blowing out. Plus, you're going to get an on-demand plus the one live bonus session. We're offering it to 25 students today, guys. You have to sign up. It's $197. It's optionsonthefloor.com. I'll put the link in here. /hot. So optionsonthefloor.com /hot. Okay. So this is a better portray of what you're going to get. Okay. So you're going to get the Unusual Option Activity course. It teaches you how to read the whole option chain at one time, how to master standard deviation ATR versus your ATR, how to add to a losing position. I added to a losing position in TIBA, and that's going to be a huge winner tomorrow because the stock is up a lot. And just fire any charts you guys in. Okay, so someone wants to see Win. Win had an ugly day today, but every time it's hit the relative strength index here in Win, the stock has bounced back. So Win, I think, will bounce back, hitting a relative strength index of 28. Someone wants to see PZZA. Okay, let me look at PZZA here. So we saw unusual option activity on OCT45s. Jim signed up. Laura signed up. Nice. So PZZA, we saw unusual option activity in the OCT45 calls. I think if PZZA holds 38, it can test up to $50. Salesforce, CRM. I think Salesforce goes higher. I think it's a buy on the pullback. All right, let's look at two more charts here, guys. Bill from San Diego. Whoa, I spent a lot of time in San Diego, guys. I love San Diego. The link is options on. Wait, we have someone for Singapore? Nice. I love international people. I've been to Singapore before. Neil, Laura. Hey, yeah. We're going to look at 5 more stocks here. So just fire in 5 more stocks, guys. Okay, Apple. Apple's 1 trillion market cap is at 207.20. So Apple, I was the biggest market maker in the Apple pit for about 3 years. Apple here, I think Apple takes out all-time highs. Everybody always wants to see Amazon. They say, like, what's going to be the next $1 trillion market cap? Next $1 trillion market cap, I think it's going to be Amazon. If I had to choose Microsoft, Amazon, or Google, I choose Amazon. And Amazon made a new all-time high today at 920. No, actually yesterday at 1925. Amazon is a buy on any pullback. Netflix is the one I don't really like. Should I do a bear call spread in Netflix? I'm from a small town in Milwaukee. Yeah. So here's the link, guys. Let's go over it one more time after I look at Netflix. I don't like Netflix's business model. Doesn't mean it can't go higher. So this is the Unusual Option Activity Master Course. You're going to learn everything you need to know. Waukesha. William is in. optionsonthefloor.com/hot. So you're going to get the master course. You're going to learn how to trade ATR, standard deviation ATR. You're going to get it on demand with the live fulfillment on August 21st. Okay, it's a $1,700 value. So make sure you guys sign up at optionsonthefloor.com/hot. Welcome, Sandra, to the program. All right, guys, that is it for me today. Everybody have a great, great night. Thank you. Make sure you guys sign up at optionsonthefloor.com/hot. You'll just be charged one time. You'll never be charged ever again. Thank you, and I'll see everybody on the live fulfillment August 21st.